Sound check. Good evening, everyone. Good evening. This is Shai with you. I apologize for the late start today, and we are good to begin this session on order flow. Not really market profile today. We're going to be talking to you about what the order flow is all about and what the order flow nuances are all about and how to get ahead in the world of trading using the demand and supply real time as projected through an order flow chart. Right. So over the next few minutes, we are going to be talking to you about basically demand and supply. That is order flow for us. The world of order flow is nothing else but the world of demand and supply. And to make it very, very easy for people who have not been used to an order flow chart, the chart is actually one single bar divided into two columns. And the right side of the column, you will see some green color font. And all that green color font is all the demand which is there in the bar. So for example, okay, this part of the bar where the entire green is, that is the demand side of the bar. And the left part where all the red is, that is the supply side of the bar. So yeah, my drawing is gotten a bit okay on the reds, but simply put, okay, for people who are new to order flow, the left hand side is the supply, the green side is the demand, and all that we do in an order flow chart is to identify points in the market where demand is greater than supply, and when that happens, price moves up. And we also identify points in the market where supply is greater than demand. And when you identify these points in the market, then price moves lower. So to put it in very simple words, an order flow chart is nothing but order information provided to you in a format which you can understand very easily, very, very clearly. There is no gray areas when it comes to order flow trading or identifying with the numbers in a chart. So all that appears in green color font will be your buy side. All that appears on red will be your supply side or sell side. All right, and you will see a lot of white numbers on the screen, and those are your neutral colors in the market or neutral traders in the market. We watch them, but when they become okay more than about 1,000, that's the time okay they become significant. Now the order flow chart which you are looking at on screen is based on the number of contracts. So the numbers are not really the share volume, they are the number of contracts traded in that particular bar. So for instance, okay, this 121 and this 178 is 121 lots and 178 lots. Okay, that's not the number of shares. The reason we do that is because when you migrate the instrument across various you go across to various other instruments, you would okay get some sort of a connection between what has happened across all the instruments, right? So you go from Nifty and Bank Nifty and you're used to seeing a certain number, let's say something like a 1,000 lot player or a 1,000 lot trader. You can see that across all instruments and know for certain that that 1,000 lot trader is now a very big trader in the market. So we call such big traders LLTs or large lot traders. Right now, we have a number of things okay which we look at in the order flow chart, and I'm going to invite okay my colleague Uttam to walk us through some more about all these things, right? But looking at this particular chart for now, and looking at what really happened, this is a Bank Nifty chart of today, a 30-minute chart, and I mentioned okay early that there was a supply coming in, right? So this, if you can make out okay over here, is a 5,000 lot seller which came in around who came in around that 9:55 a.m. Window today, early in the morning. So this over here was a classic example of S greater than D, or supply greater than demand. And I just mentioned to you, whenever that happens, whenever you find that supply is greater than demand, what happens next? Price moves lower, right? So it's not going to happen same second, it's not going to happen same minute, it may not even happen in that same hour, but eventually, because of the fact that supply is greater than demand, you will see price moving lower, right? Now, within the order flow, there are various elements. This is all an order flow chart. There are various elements, for us to understand all that, all the information which is already coming to us. So we've highlighted, a few of that in previous videos we've done, and we've highlighted a lot of it in the user manual also. And we'll walk you through a number of these things, as they happen, right? This is information coming to us. Not every single day, not every single minute you will find that supply is greater than demand or demand is greater than supply, right? So what do you do at that period of time when you do not find a 5,000 lot seller in the market? Now granted, this is one of the more easier ways of trading an order flow, but a 5,000 lot seller is not going to come to you every single time, right? So you have to be ready, for working, or you have to be ready to work with other parts of the chart and upskill yourself in certain other elements, like knowing where the imbalances are, knowing where the caught is, and knowing where initiative traders are, where responsive traders are, where the order flow is showing that they are booking profits, etc., etc. So it's not just one element which makes up an order flow chart. You need to upskill yourself with about a few more to get to a greater understanding about what an order flow chart can do, right? One of the bigger things we focus on is the appearance of an IB bar and an IS bar, the appearance of an LLT, a large lot trader, the appearance of the positioning of the POC, the point of control within the bar, the positioning of the VWAP within the bar. A number of these things we focus on as the market moves, just for us to have a little bit more of an edge in understanding an everyday situation in the market. We cannot wait for one single strategy to guide us at all times. So that's why we have to work with a collective set, a larger bracket of strategies as such, to make the most out of it. All right. I urge you to walk through the user manuals to get to know a little bit more about these strategies, etc., and how best to use them in a live market situation. For now, I'm going to call Uttam over, and he's going to be walking us through some more nuances about how to best interpret the order flow information which comes to us, right? So I'll hand it over to Uttam, and he's going to talk to us about a bit more about the order flow chart.
Good evening, guys. Good evening, everyone. Thank you, Shai, for giving me this opportunity, and welcome to all. We are in a new year now, 2024. So, having our first session on order flow. So, as Shai mentioned, we use order flow for trade execution. We at WeTrender we use a combination of market profile and order flow. So order flow is where we get to know the pulse of the market. We see what is happening, how much volumes are coming at which level, which helps us to take trades. It gives us very fine-tuned entries and exits, and it also tells us when the auction is changing the nature. So right now on screen, I have the Nifty futures 30-minute order flow chart. So before I start with this, I would just want to touch base upon the basic concepts we use in order flow, which are the RB, RS, IB, and IS. RB is responsive buying, RS is responsive selling, IB is initiative buying, and IS is initiative selling. So we have these four concepts which we use to understand what the auction is doing and understand the relation between the supply and demand. So whenever we are having an IB, an initiative buy candle on order flow, we know that there is an imbalance starting on the upside, that the demand is more than the supply. So we look for a long trade, and we have certain setups, certain rules which we follow, and accordingly take trades. So similarly on the sell side, when we get an IS bar, we look for going short in the market. Apart from this, we have the LLTs, as Shai mentioned, which one of which we had today in Bank Nifty, which helps us to know that the market is definitely looking for more downside till the time that LLT is not being taken out. So these are the four concepts which we use apart from the LLT concept. And every order flow bar on 30 minutes has, as well as 3 minutes, has the POC. POC is nothing but the point of control, the highest volume concentration of that particular bar. So we follow these market profile concepts on all time frames, be it the 3 minute order flow bar, be it the 30-minute order flow bar, and be it the daily also. So right now what we have is the 30-minute. I'll just run through quickly a brief action of what happened yesterday and today in both Nifty futures and Bank Nifty futures using the 30-minute order flow chart. And then I'll move on to the combination of 30 minutes and 3 minutes, which we use in our live trading room to take trades. So what you have now is the Nifty futures chart. I quickly move on to yesterday's 1st of January, so that we start from yesterday and then we move on to today, seeing what the order flow showed us on the 30-minute cycle. Okay, those who are watching the order flow chart for the first time, you have certain elements on the chart which are also based on some market profile references. You have the initial balance, which is the first ever high and low. Then you have the POC of every bar, and you have this green band which continues the green line, but that is the VWAP of the day. So that VWAP, as and when the VWAP moves, that green line continues moving. And then you have one bold white line, which is the POC of the day. So apart from the VWAP and POC of every bar, we have these of the day also marked, so that we know on the higher time frame where the VWAP and the POC is and what the order flow is doing when it comes to that particular reference. So I'm quickly starting with yesterday's bar. This is the 9:15 bar, the 30-minute A period in Nifty futures. What happened was I'll just I'll just increase the PPR size so that, yeah. So right now I have my cursor on the A period of yesterday, the first 30 minutes of the 1st of January. And you can see we did not have much volumes at open. There is a lot of zeros on both sides at the open. And then we probe lower. But when we probe lower, we have got this three greens on the buy side together, flock together. We call this the trifecta. So trifecta of greens or trifecta of reds coming at an important level tells you that there is demand building up or there is supply building up, because this 21810 was a previous FA in the January series, which was an important support, and we had this marked on our charts. So right above that, when we are getting these three greens, this is a responsive buying bar. The POC shifted to the lows and we've got greens here. So this became our reference after the A period, and we were looking for a move back to the upside, testing this previous day's references. So as you can see, the entire afternoon we remained above this, although we did not get any good demand. No IB bar came in later till the J period. This 145 bar is the J period, which is the first IB bar we got yesterday. So till then in Nifty futures, we were only getting RBs. And what it was doing more importantly is it was taking support at the VWAP of the day. So you can see these RB bars coming at the VWAP. So that is an indication that at the lower zone, the demand is there. But to go fresh long, we needed an IB, which was absent till the J period. So even though we were making new highs almost every bar, it was immediately retracing because there was no initiative buyer who was taking it forward. So the first initiative buyer came in the J period, and you can see how Nifty futures moved. So this is the 30-minute bar chart. So what we do is watch the 30-minute along with the 3 minutes. So the 3-minute order flow gives us a much faster entry and an exit. So we don't need to wait for the completion of this 30-minute bar. But once we get an IB on the 3-minute, IB plus IB, we take a long position. And on the 30 minutes, what it helps us to do is once we have formed this IB, we know that now the bias is on the long side. And this IB low, the IB bar low 21881 would be our stop loss to remain long. We would look to buy on dips when we have this pattern on the 30 minutes. So, and the POC of this bar becomes an important reference. So you can see the POC of this bar is 21934. We also have VWAP marked of every 30-minute bar. So not every bar VWAP or POC would be important, but certainly the IB bars and the IS bars and RB bars which are coming at important support. For example, in yesterday's morning bar which I showed you, the RB which came at 21820. This was an important reference even for today's open, because yesterday close when we made the drop, you can see we dropped right till this 21827 point. It defended even the 21820 yesterday also. So that became an important reference, and it becomes more important uh, as it has not been tagged, it has not been visited. That means there is uh, some institution which is defending that zone. So yesterday in the J period, we got this IB. So this was where our bias changed to the upside, and we are looking for the 22,000 tag, which was the 3 IB target for the day. And it went on to make a high of 2205, 22025. So what happens once we make have a IB bar? The first reference would be the VWAP and the POC, and the IB remains in play till the low of this IB bar is not taken out. Also, this any signal which comes on the charts is valid for a T into 10 rule of 10, what we call the rule of 10. So if you're watching the 30-minute order flow chart, this signal is valid for the next 10 periods, including this, it is for the 10 periods, unless it gets negated by breaking low of this, or it gets a opposite IS bar. So what happened yesterday was we made this new highs. As soon as we made that 22025, we came down, and as I was mentioning in the first bar, we had the trifecta of greens. So we had a similar trifecta of greens in this K period also yesterday. But when this POC and this VWAP of the K period broke, that was the first sign that something is not right. Otherwise, the setup yesterday was of a trend day to the upside. So ideally, we should have closed at highs. But what happened instead was we broke this bar, and then we broke the POC of the IB bar. And finally, when we broke the lows of this, the bias had completely reversed. It had changed. So what happens then is once we get such a big bar, I'll increase the PPR so that we can watch that 30-minute bar in one screen. Ideal PPR for the 30 minutes in Nifty is 2, but just because we had a huge range yesterday, I'm just increasing it to maybe 3. We'll keep it as 3. 3 should be better. So what the order flow shown us that till the K period, and even in the when the L started, the demand was more than the supply, and we were making new highs. But in the L period, the situation changed. the supply started overcoming the demand. So which is why we broke this IB low. And now our reference, although the POC of this bar is right at the lows, which is why this is not taken as an IS bar, we have the VWAP of this bar, which we would take as a reference, which is 21958. So for us to get back to being bullish, we need to take this level out and preferably on a IB. So once we have this, we closed right at this 21827 mark yesterday. So it negated the entire up move and there was no case of any longs to be carried forward. So this was yesterday's order flow chart, how we got a good signal and that signal got negated. So from our long bias, we changed to neutral in the close. So now I'll come on to today's chart. So now we have the reference of that. I'll close this live panel because we don't need this now. So you can see we have the VWAP of this closing bar, which is at 21855. And we struggle to get any demand at the open today. So you can see there are more of reds over here. You can even see the caught was on the negative side. So, and on the demand side, the numbers are far smaller than compared to the supply side. So here, this first bar was a very narrow range bar where it was testing the range on both sides. So as we mentioned that 21820 from previous day, you can see how the lows of the morning was right there. So that was holding up. So that was one reference which was telling that there is some demand left. But in the B period, we left an extension handle right at that 21820. So through order flow and through market profile, both had given us that reference as an important one. So when we broke that, we knew that the trend, the bias is now firmly to the downside in Nifty. So once we made that break, we fell down immediately to 21747 and then made a seaside extension. So I'll quickly go back to the 26th of December profile to show you how from there we got more demand in the auction and we started a move up and we left an extension handle at the 21799 reference. This 21802 which you're seeing is coming, I think, from the 26th December profile. So quickly go on so that so so this is the 27th, sorry, this is the 27th where we had a spike high. We left an extension handle at this 21799. So you can see this IB bar here. This IB bar low is a 21742. So this was our reference to stay long for the this plus 10 periods. The signal was valid for 10 periods and it gave a quite a big move. So here you can see this POC of 21802 which was carried forward and the VWAP of this bar which was a 21832. Although 21832 was broken, 21802 was holding and we were getting RBs in the current day. So once we broke the 21802 in the morning today, it was a free fall. We went on to break the 21742 and we made a low of 21674. But and what how we know if the auction is to continue the imbalance or is it beginning to start forming a balance is by the placement of the POC and the VWAP of every bar. If the POC and VWAP of every bar, every 30-minute bar is on the downside, is forming lower POCs and lower VWAPs, we know that the trend is continuing. But if you start getting overlapping POCs and overlapping VWAPs, we know that it is beginning to form a balance or the imbalance is done and now it is time for a balance to form. So what happened after the C side today is we remained in the C period range and the POC you can see were all overlapping. So that means the selling was done. So it had to go up to find fresh sellers, which is what the auction did. We did not make a lower low after C today. And then we went on to go above VWAP and make a high test this extension handle of 21820. So right there we form this RS bar. You can see the POC is shifted right to the top. Even though we have this 3454 green, it's a buy contract. Ideally, if it was an initiative buyer, he should have been able to take it further up. In fact, when we got that big LLT, it was showing even on the 3-minute order flow. We were looking at going and testing the highs of the day. But what it did was the bar it came, it even broke the low of that particular 3-minute bar. So which negated the bullishness it had brought. And it ultimately turned out that it was either a stop loss order of a short, because this was the junction where people we had lot of shorts which had entered, or it was the adjustment play where in options they have taken some position and in futures it is a showing a long contract. So here we got an RS here. So today after the break of 820 we did not have any IS or any IB bars. So but thanks to the market profile and the earlier references, we knew that we have to look for downside till one certain level, and then on the upside we need to take off these levels. So after this RS we again came down lower and we tested the POC which had shifted to 21720 in the afternoon, but because of the 3000 contract it went back to the 21815 level now. So all in all, this is how we read the order flow on 30 minutes and see what opportunities are there. And for execution, we use the 3-minute order flow chart. I'll just quickly go to the Bank Nifty profile. So Bank Nifty also, what I'll do is I'll start from yesterday's so that we know what happened yesterday and what was the continuation we got today. So Bank Nifty, in fact, was stronger yesterday. Yeah. So this is the 30-minute order flow chart of Bank Nifty of yesterday. I will close this live final chart. And as in Nifty, you can see this is the A period. We had no volumes at the open, and then we probe lower. And similar to Nifty, we have formed a RB bar. RB bar right at that 48450, which held. And after this held, we went on to remain above VWAP in Bank Nifty. So you can see this C side which made a low in the C period and which has zeros on the sell side. The left side is the supply, the right side is the demand, and you can see it is showing no supply at VWAP. So it was very clear that Bank Nifty is looking to probe higher, but it was still going at a slow basis. Although it was getting supply at these zones, it was still demand was still defending the VWAP of yesterday. Still, we got this big move again in the J period move was not as big as what we had in Nifty futures, and K period did go on to make a new high. So what happened in the K period is we made this new high and we had this POC at 48808. So this was our reference. Even the VWAP was around that. So when we were in the K period, I had even mentioned this in our live trading room that 48800 would be our reference. If that goes, then Bank Nifty the upside is negated and the bank safety can look to test VWAP. But what happened yesterday was it fell huge in a huge manner. And here you can see the moment the L period after 245, we got this big seller here, and we have got this trifecta of reds in the K also. So all this is telling us that demand is less and the supply is more. The supply is overwhelming the demand. And then we got this RS bar right here. This in fact is as good as an IS also, or even though the signal is not got printed. And you can see when we broke this POC and VWAP of this bar, it was very clear that the upside is gone. And the VWAP also, the day's VWAP also was broken very easily. So that was just telling us that either there are too many weak longs who had entered, and the supply is also increased. So it was a dual factor which was working yesterday, and it was a big liquidation move. We had zeros. When you have a zone of zeros in the order flow, that too on the 30 minutes, it is very clearly showing that the auction is in a very quick imbalance. So what it did was it left this VWAP at 48676. So this would be one reference which we would take forward for today, along with this zone, because from this zone is where you can see this 965 seller, which we also saw on a 3-minute order flow chart. So as soon as this 48 and 48,800 level broke, it started to. And one more thing I would want to add here is the high here, the 48,869 high was just short of that 48,900, which was the rollover point of this series and the highest volume which had happened on the 28th, on the expiry day, 28th of December. So you can see this bold line from the 28th of December, which is 48,900. So this was the POC as well as the level where the maximum rolls had happened. So once we had this marked also on Bank Nifty, because we needed to see good buy volumes above this level for Bank Nifty to be bullish for the January series. So when we did not, and yesterday when we made the tries, so it was very easy to know why Bank Nifty fell more than Nifty, because Bank Nifty got rejected from an important point. In Nifty, the similar rollover point was at 21,930, which also was which was taken out yesterday, and which is why we got that huge almost 100-point move in no time. From 21,930 we jumped to 22,025, but in the reverse, once that 21,930 broke again, we never got back above that level. So that is how these order flow gives us important references, not just for intraday but also for the series which is going forward. So coming to this bar, L period bar of yesterday, we had this VWAP marked here, which was an important reference. Along with this, because it was a neutral extreme, although the adjusted close was not below the IBL, but we were closing at the lows. So it was as good as a neutral extreme profile. And the VWAP of a neutral extreme day is this 48620. So this would be our reference for today morning, along with the VWAP of this, the K period, the closing imbalance. So I quickly come to today's chart and see what happened today. Shai has already shown how we got that huge seller, but before the seller, we already knew that the bias was to the downside in Bank Nifty. Although we got this big green at the morning, 2199 green, which was an RB bar in the A period, it took support. We have zeros on the supply side here. The A period did give us some signal that there is some demand which is coming in, but on the upside it was not able to do much. And you can see these are there, you can only see reds over here. There are hardly any green. The only green here in the 30-minute chart was at 2199. So it is very clear, and the cot also is showing you a red uh, figure. So it is very clear that the supply is more than the demand in Bank Nifty. And here, when we made the similar highs, and then we got this huge 5,300 seller, it was very clear that the bias is now towards the downside. So not only that, and so this became our reference. This 48316 became our reference, and the VWAP of this bar, which is at 48293. So as we move forward in the day, we were looking for more range extensions on the downside, but we got that seaside. Seaside is something which we trade very fast, and we know that seaside is mainly uh, a signal which you cannot trust. So it can give us a bounce. So what happened in the seaside is we got an RB candle here, responsive buying pattern. So you can see we got zeros. We made a low of 48,026, and which was good to cover the shorts which you were carrying, because it was looking to get fresh seller now, because the morning seller had maybe booked, or the auction had gotten too short. There were too many shorts which were there in the system, because of which it had stopped to fall. So what happened is we made a narrow range in the D, and in the E period, you can see we have got this 1052 seller at 48209. So mark this level and see that this level was not crossed again for the entire day. And in fact, even in the later in the afternoon, Nifty, when it was looking like it can go on to make new highs, when it got an probe above VWAP, Bank Nifty never did that. So here you can see again, once we got this seller, Bank Nifty tried it. It remained between these two zones. This was the upside RS bar where the supply was there, and this was where we had got the responsive buying uh, level. So we were stuck between these two, but what it was doing was, because the main bias was down and we were trading below the VWAP of the day, plus the fact that we had one big 5,000 seller which who had not shown any signs of covering, because we never found a similar big order on the buy side after the that player came in. So this was clear that it would make sense to remain with a short bias and short on rises near the VWAP of the day. So here you can see this high was right at 48209. Then we made a lower low in this period where we tagged 48016, but again the POC shifted to the lows. So it became an RB bar. So again, we would not want to remain short at this level. If you have shorted here, it is time to cover over here. So RB is telling us that the supply is not able to drive lower, or the supply is getting exhausted. Maybe with the weak hands or the late guys or the longs who have stop loss as being hit. It could be any reason, but the placement of the POC will tell us whether we need to continue with the trade or we need to book out. So what it did again was it gave this bounce again to VWAP in the K, and we made a high just right at that 48208 again. So this is very clearly telling that this level VWAP is not been able to been taken out by the buyers, and the sellers have complete control over here. So in the L period, it was not surprising that we had a similar liquidation move as what we had yesterday. So we can see it once it broke this RB, it just continued to fall lower, 47,895. And also in the last M period, we took this trade in the room also. Once we made a bounce, Shai had given this reference of 48,000 as being the stop loss. And also this was our extension handle. So the spike had started at this 48,016 level. So unless that is not taken out, there was very good chance that we would close at the lows. So all of us in the room took this trade because once we saw this bounce up, we knew this is not been able to take out this POC and the VWAP of the previous bar. And we took a put trade in the last 10 minutes also, and we saw that gave us a good return. It made a close at lows. So again, this would be a reference. It's a spike close. The spike rules will be in play. So this is how we watch the 30-minute order flow chart and take our trades. So I'll quickly show the combination of 3 minutes and 30 minutes before I hand it back to Shai, because I think we are running out of time now. So I'll show the 30 minutes, the Bank Nifty chart, because that is more. So we have the 30-minute chart on the left side and we have the 3-minute on the right side. So on the 30 minutes, we know that 48209 is an important reference which Bank Nifty has not been able to take out. So what we watch on the 3-minute is what the order flow shows us at that reference, because it tried multiple times to take that out, but we were only getting RS bar. So you can see this 239 bar. 239 bar, we can see it tried to probe higher. We have the days VWAP right above it, and we have that 48209 level here. So right there, it is getting rejected. And this is also this dotted line is the IBL, the initial balance, the first hour high and low. So that is also an important reference when we use MarketProfile. So we see if order flow is showing us some initiative activity there. So which was not the case. So it was very clear on the 3 minutes that it is getting rejected here. although the bar was showing this RB at 48,040, which was taken out in this 305, this late move. So this bar 48,140, when it broke, this was the bar where you would go short. And this is where I was explaining that last 10 minutes, the put which we took. You can see this is the POC of that bar. And right here, we have again formed an RS. So the supply is coming back. You can see 495 red, and you can see the cot also is negative. So any bounce back to the POC of a good IS or an IB bar, if that is again getting defended, you know that the it is going to go back to test those lows. So as we can see, it went on to make new lows for the day into the close. So this is how we watch the 3 minutes and 30 minutes combine. And see, yes, the last 10 minutes can be all intraday businesses which are closing. So 315, after 315, we don't take many trades, and exception being if on a day where there is a spike or when there is a neutral extreme. These 2 days are exceptions where we look for trading till the last minute, because we know that the auction has got a good chance to close at the extreme, the extreme. So but all these trades are taken with a very good risk reward. And at the first target, we book 50% and trail it to cost. So it's like a risk-free trade which we take, even if there is any trade which we take in the closing minutes. So I think that's it from my side for now. I'll hand it over to Shai because we are running out of time. And do make sure you come back on Friday. On Friday, we will see these same order flow concepts, how they work on the option charts. So we will have the same 30 minutes and 3-minute option charts open and see what trades we could have taken for that day or for the previous day. So with this, I will hand it over back to Shai. Thanks, guys, for listening in, and let's stay and keep learning and keep earning. Thank you, everyone.
Thank you, Uttam, for that. It was a very wonderful
Sure.
explanation on what you actually need to look for in the market profile and the order flow. Right. So before I wind up, we wanted to basically communicate to you that we want to keep these sessions going. So please invite your friends, the people whom you trade with, your community, people who are looking for a helping hand to work these markets. We are derivative traders. We focus on the indices. We focus on what we need to do with the instruments, with the using market profile and order flow. And our mission is only to show a side of trading using market profile and order flow, which a lot of people are not aware of. So we will like to continue on this mission and bring a little bit of evidence, a little bit of hope in understanding a way of markets which are not a lot of traders are not used to. Right. So you would have heard that 90% of traders do not make money in the markets. And that's a piece of statistic which everybody knows, but nobody knows why, and nobody bothers to find why these traders are not making money. But with a little bit of help, with a little bit of hand holding, with a little bit of the right charts, we believe that there is a lot of potential for all of us. You don't have to be the smartest person in the room to succeed at derivative trading. But if you are struggling, it's only because you are not having that edge which is required in the derivative world of today. So using the charts we have built at VTrender, our mission is simply this: to make it even as a trading field between us and other professional traders out over there, which includes the institutions. We cannot beat them at their game, but using order flow, we can definitely track what they are doing. We can know when they are buying, we can know when they are selling. And there is a saying which says that if you cannot beat them, you should join them. right? So that's what our purpose of order flow is, to find out, okay, what these big guys are doing and join them in doing that, right? So today, okay, was a classic example of a big guy working the markets, and we didn't know what was going to happen, okay, through the day. But when he came and he was on the sell side of the markets, our job was just to follow him and be on the side of the market. And eventually, okay, that trade, okay, resulted in a 400-point move into the day, and there could be, okay, some more, okay, later on in the day. So what we are doing over here is, we don't claim to be the smartest, but we know, okay, for the fact, okay, that there is a lot of smart money trading the markets, and to follow them is our mission, is our goal. And if we can just understand what we are doing, take 1 minute, okay, to pause, reflect in a strong moving market, we could, okay, join them. Okay, these are trade opportunities, okay, which I believe everyone should be looking at and getting good at, right? Now the other thing is the markets are not a simple box where you open every day at 9:15 a.m. and you work one strategy and you expect, okay, to make millions, okay, out of that strategy, right? So every single day the market is different, right? So today is very different, okay, from what it was yesterday. It's very different, okay, from what it was through November and December, right? So you are seeing, okay, the month of January, we've not seen, okay, the kind of selling we saw today in the entire 2 months of November and December, hardly. Okay, so it's coming on now, bigger and stronger. It's a phase of the market, okay, which we are going through. And the fundamental thing over here is the markets, okay, would keep changing. Their job is not to be the same 9:15 to 3:30 p.m. every single day. So we need, okay, to tune ourselves up and understand, okay, this, that the market, okay, is going to feed us different information every single day. So we have to upgrade ourselves, we have to upskill ourselves and try to find out what the markets are doing every single day. So we have to, okay, collect this information from the markets. We have to understand, okay, what it is doing, and we have to find a way to monetize this information which these markets are doing. And the day, okay, you can do that, you can sync with the market, and you have a strategy, okay, for every single thing, okay, which the market is doing. Not every single thing, okay, you may not understand, okay, some parts of what the market is doing, but as long as, okay, you're not treating it, with one single strategy, with one single way of looking at things, you are on the safer side of markets. You're at least preventing some big losses to come your way, right? So I hope, okay, that resonates, and we will be doing these sessions every Tuesday at 5 p.m. and every Friday at 5 p.m. And the outlook over here is just to share a little bit more about what we know, and for you to have a little bit more assistance in what we are doing. And we hope, okay, you can spread the word, okay, you can invite some more people who are not really proficient in the markets today, and help them as well get good at this business of trading, right? So with that, okay, I'd like to sign off. We'd like to call this session to a close. If you have any questions, as usual, please bring them to charts@vtrender.com, support@vtrender.com. You can contact Uttam on his Twitter, or you can message me on my Twitter as well, and we'll try to help as best as we possibly can, right? So signing off for now. I'll leave you with this, and we'll see you back and early tomorrow morning. Thank you, guys.